Let's welcome in the management at Gokaldas Export. The MD at Gokaldas Export is now with us. So we do know that there are benefits of China plus one strategy, which is playing out for the sector. How much of the world trade is would you value at, and can you tell us what is the Indian current export and what is the potential to capture, say, over the next 3-4 years?
So the world global apparel trade is about 500 billion. And India is currently exporting about 16 billion. That is the FY22 figures. So we are a very tiny fraction of the global apparel trade. We are a little over 3%. If you look at China, that's over 120 billion. Bangladesh is closer to 40 billion. So is Vietnam, about 35 billion. And then India comes in at 16. So we have a long way to go to catch up in terms of a share of global trade. I believe that we can have a solid growth going forward. India can easily try for doubling its apparel exports in the next 5-7 years, and that is quite possible. Looking at how the apparel exports from China is declining and the prospects for India is improving. So there is an opportunity which India should capture.
The exports from India can as much as double over the medium term. That's the optimistic commentary coming in. But Mr. Ganapathi also wanted to talk to you what's happening with our neighboring country, and that's Pakistan. They also are a large player when it comes to the entire global setup with respect to the textile trade. What kind of impact do you see, and is this an opportunity for the Indian manufacturing as well?
So there has been a bit of a challenge in our neighborhood. So Sri Lanka has gone through some challenge, but Sri Lanka exports 5 billion. Pakistan is smaller, and there are some challenges on account of the economic situation of Pakistan. So it works both ways. When the currency drops quite a bit for these countries, they become more export friendly, or their products becomes cheaper. On the other hand, their own economic troubles, high cost of fuel, high inflation, etc., also impedes their ability to perform well internationally. These are all opportunities, but I think the real big opportunity for us is what comes out of China. The increasing concern in the Western Hemisphere for reducing their exposure to China and looking at alternative sourcing locations is what presents the biggest opportunity for the country.
What would you think is the impact of the dollar index now going to 110 level when it comes to the global trade? And even cotton prices have been very elevated throughout this year. How are you looking at the entire commodity dynamics?
So commodity prices have been, cotton prices have been high, and so have been polyester prices, thanks to high oil prices. For a whole of last year, we battled high cotton prices. It did come down, and then it again went up. Cotton prices have gone up. So we are dealing with it as it comes. For an apparel manufacturer like us, we are a little far away from cotton. We buy fabric, so the impact on fabric prices are not high, and YOY we have not seen too much of a change. So we should be able to deal with it. We already dealt with it last year. So for us, the impact is not as pronounced, I would say. But a cheaper cotton always helps the country and improve its exports. Hoping that over a period of time, cotton could subside, but we'll have to wait and see how that pans out.
Got the point, sir. But sir, can you just tell us about the cotton, prices and availability both? So one is, of course, you book cotton and you try to get it, but before that, if price changes substantially, can availability be an issue? Which is, as the prices have been very volatile.
Sure. Just to clarify, Gokaldas Exports is in the apparel manufacturing. We don't do spinning and none of the fiber and fabric manufacturing. So we buy fabric from the market. So to that extent, we don't get exposed to cotton prices directly. It's indirect in the form of fabric price increase. If there is a higher cotton price. So for us, our raw material costs are by and large passed through. So we tend to price that into our pricing to our customers, and hence we are less impacted by such sharp price movements on the raw material side.
So you're not directly impacted by the sharp movements, but what you are impacted by is the demand sentiment across the world. US is headed into a slowdown. Europe is talking about a recession. Your clients, the likes of Walmart, etc., have been cutting orders for a few companies. What's the pipeline that you have had your conversations with the clients across US and Europe?
Sure. So I find that the sentiment in Europe is quite negative when it comes to the prospects going forward, because they are facing a very high inflation and a very high price of oil and gas. Our exposure to North America is much higher. We export almost of our exports, almost 80% goes to North America. Europe today is only about 5%. So we are really not North America centric more, even though we are trying to correct that balance going forward. So if I look at the US market, which is the principal market for us, while there is a talk of recessionary trends, inflationary trends, the demand doesn't seem to have fallen off the cliff or any. On the contrary, YTD July August, I think for 2022 has been significantly higher than 2021. So we have not seen too much of a fall in sales. However, we contend with high inventory position with our customers. So you mentioned about Walmart, whether it is Walmart, Target, Gap, all these customers seem to have considerable inventory overhang from last year. And that is coming in the way of them importing a high amount this year. So there may be a bit of a slowdown. We had indicated that to our investors as well, that H2 of this year, and particularly Q3, we may have a slight slowdown compared to our usual trend of strong growth. But then after that, I believe that this inventory problem should work its way out, and we should be back on growth track. And keep in mind that when a customer buys, say, X% lower on account of whatever their problems, inventory, etc., it doesn't mean that they buy secularly that percentage lower from all suppliers. A good, solid, consistent supplier will be able to retain its market share by consolidating other suppliers. So we have to work our way around this problem in order to still stay ahead and keep growing.
Okay, we're going to leave it at that. That's Gokaldas Exports for you, trading low about 0.3% at the moment.